Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday. It is May 15th. This will be our chart lesson for today. And I didn't do any trading today. I didn't get back to the office till real late. They did dilate my eyes today, unfortunately. I was hoping they wouldn't. So my eyes are still dilated, so it's a little difficult for me to even look at the screen. But I thought I'd go ahead and just do a quick chart lesson, show you what I see here and mark the obvious trades. And there's probably some more in here because I just came through and looked at all this after the fact. I was not watching prices as they printed today. And so everything you see on here, I did completely 100% after the fact today. Doesn't matter. The trades are still the same, whether you see them in real time or you see them after the fact. You got to learn to see them after the fact before you can see them in real time. And I make that argument with people occasionally. They say, well, anybody can come along after the fact and pick out trades. And no, that's not true. Yeah, they might be able to say, hey, you should have entered right here, but can they explain why? That's the key to it. And that's one thing that I tell people from time to time. The way you learn to trade is first you got to be able to find it after the fact. And once you can clearly look at a chart and see the entry points and understand why they were there, then that's you're actually making progress. That's a good start. And because many people, anybody can look at the chart and say you should have entered here, but if they can't tell you why and explain it in plain English, then they don't understand. They're just looking at where the chart took moves, and you can look at every one of these big moves. Most every one of them happen at a key entry point, and that's what I try to tell people. And where are the key entry points? Trend lines, uh, support and resistance, like these little range areas right here. The support or the resistance, the trend lines, and the EMA. And all a trend line is a slanted support resistance line. It's slanted. It's not straight like this support and this resistance right here. But it look how it does it. Prices just bounce in between, just like they do right here. It's the same thing, just at an angle. And this is a clear trend down. Everything is below the EMA. EMA is pointing straight down. This is where you want to try to grab a runner. Once we started trending up and everything's in this clear two-tiered channel working higher, you want to try to get to the upside. And your best trades will always occur at key entry points. And so let's back out a little bit, and I'll go through the trades real quickly. Like I said, I'm going to go through these real quickly because I'm not seeing real good, and it's just kind of uncomfortable. It's starting to wear off now, but it's just a little uncomfortable when you're looking at the screen when your eyes have been dilated. And I've had several people suggest to me to move to a black chart. I tried a black chart, but I've looked at this thing for 15, 20 years like it is, and I just can't change back. I've tried it, and it just I'm sure it would probably be better for my eyes, and I appreciate those that suggested it because my doctor actually suggested I try that too. He said it's not going to, be a deal breaker for me to look at a light chart. He says, but it might be more comfortable to my eyes to look at a darker chart, but I can't do it. I'm sorry. So as long as I can see and I can trade, I'm going to be trading probably this chart just like you see it. So, but I do appreciate the suggestions. Let's talk about the trades again. I'm going to go through these real quickly because I want to wrap this up and get it posted. And if you were looking for the mid-morning chart, there wasn't one because I was out this morning for a doctor's appointment. So, but anyway, 7 o'clock hour came on this move down right here. Notice you got a new high. That would have been a great entry. It's a little bit before 7, but if you were trading then, that's a great big bearish bar right off a key entry point, which is that trend line and the EMA. And if you took that one trade, you could have ridden this all the way down. And if you just measured that leg and then measured this one, you got two perfectly measured legs there, and you probably could have been done for the day. But anyway, notice that new high, and you're moving down. You get a first entry, and then you get a second entry, and it actually breaks higher and turns and goes out the other side. I like going short right there. And we just came off the high, so you'd expect we'd probably try to go to the low of the two-tier channel. And that's exactly where prices drop down to. And look what happens when they touch the low side. We move to the upper side. Generally, you'll come back to the midline, and you could turn down there again, or you'll head back to the other side. That's why sometimes the midline is never as reliable as the trend line, although it is a key entry point and it does act as a key entry point. And so it just depends on the setup and what prices are doing, whether or not you want to enter off a midline. And the midline is just the center of the. This is your trend line, and this is your trend channel line. And then when you're going up, this is your trend line, and this is your trend channel line, and the one in the middle will be your midline. So some of this stuff that I do with trend lines comes from market geometry. People tell you there's no such thing as market geometry. I think if you watch any of my charts and you look at my trend lines and trend channel lines, that you'll agree with me that market geometry is real. Measured moves, all that stuff, it's real. Don't ask me why it does it, how it does it. All I know is it does it. And I did quite a bit of extensive study 20 years or so ago on market geometry, and there were some traders that were big into that and looking for measured moves and things like that. And that's where I get some of that from. I picked it up from studying it for a while. But anyway, I don't want to get off on that tangent. I don't want to confuse that. I still price action is the king, but that's why I'm so big into trend lines and trend channel lines and support and resistance and all, because it's really, in the end, it's all about the key entry points are always important. Support and support and resistance points, those key entry points, that's where they're always going to be. So 99% of the time. But you got that first trade right there on the failed second entry. That might have been the only trade you needed today. There's another little hiccup right there in the low, but you're going short at the low of the day. I don't think you want to fool with that. Then you're working back. Like I said, you come off the low. Where are you likely going? Back to the high. And this is like a third entry here, because there's your low, first entry, second entry, and then 30. But we're back to the key entry point. Notice you got a little close outside, move to a new high. You're right at the EMA, and you do get a close outside the trend line this time. And so once we make a new low, it could reverse. A lot of times you get two legs down though, and there's your first leg, and then you reverse here and you get a first entry, a close outside that little short-term trend line, and you move to a new high, and then a second entry short when it broke lower. I like that one. Prices still haven't really pushed through the EMA much. They'll usually push through a few times, at least a little bit, before you'll finally get a reversal, especially on a trend this strong. Generally, you're going to at least make a new low on a trend this strong after you get a convincing close outside the trend line, which was here. So we did get a new low instantly. We didn't make another new low with our second leg down, but you still got that second attempt to go lower. Here's your first one, and then you made a little two-legged correction. You try to go lower, and then we reversed out of here. There is a failed second entry short here. Notice you push up first entry, then push up, and you got a little key entry point. But you don't want to go long right at that high. There's basically a little double. Maybe you could even call that a triple top, because you had a little correction right across here. And so you need to make, you need a little more information to know that this thing's reversing. That's not quite enough. You really got two legs up there. So it does come back, makes a low right here, turns down, makes a lower high, and then turns and goes out the other side. I like going long there on that second entry. Notice that high, pull back first entry, pull back second entry, and I liked it. It actually went lower when it broke out that other side. I'd go long right there. And there's actually a failed second entry short right here, and you're not back to the upper side. That's a possibility. I didn't mark it. It's a possibility. I'll just outline it with a green one. I'm not as crazy about it, because you're going long right into a double top there, basically. So, and you might even call that a triple top. I'll just draw the line across there. You can kind of see that working across there. And so you got to be careful going long right there. It's just not a great spot. But anyway, and you work back. You actually confirm this trend line right here. This is really a little closer here and maybe a little flatter. I don't have that drawn exactly right. It's real close though. It fits better off the top, so this is one you really want to fit, get to fit off the top and then drag it down. And there's a midline in there too. It's not a long enough trend that you really need that, but when it comes back here, you're basically confirming this trend line, and there's a little two-legged move back, but your signal bar is not very good. And you can see what happened at this resistance here. We could not, prices just couldn't get through there. They tried once, twice, 3 times, 4 times, 5 times, 6, 7, 8, 8 different times they tried. And generally when a market can't go higher, it's going lower. But look what they did. All they did was trap people to the long side. And that's what they'll do. A lot of times if they can't push it through, they'll let it fall out the other side, and they'll trap a lot of people on that side. They'll get them all excited about the short side, and then they'll reverse it. And the momentum of everybody having it, look at it go right here. All these people that were selling in here and it sold all the way down, they know now I'm on the wrong side of this thing. We're reversing, and at the very least, you're probably going to get a measured leg like so from here. That's just at a minimum. And that puts prices right up in here. And you can see we found a little resistance. You know, kind of went sideways. We actually shot up a little further than that first, but this really scared all the shorts out. And when it came back and went higher again, they're really jumping ship now. So, and that's not unusual. That's kind of what you'll see. And this is what I was talking about the other day, is that at some point this thing will find a bottom and you'll get some big, even if we're going lower, you're going to get some strong rallies. So be prepared for them. And but this one, you got a little short here off the lows. You got a nice little bullish bar. It doesn't quite go to the top, but when it didn't go back to the top there, you got to figure we may break out this lower side. So I would be real leery of going long right there. If you did go long right there, because that does somewhat meet our criteria, you know, if you do go long right there and you got stopped out, when it turned back up, I'd jump back on and try to catch that, try to make that little loss back real quick. But that's where you want to try to go long on that big drop out the bottom that fools everybody. And you know, you can see how bearish that bar is, and everybody's, you know, the people that are just looking, thinking, oh, I got to get short here, and then suddenly it's rocketing in the other direction. And when it breaks above this right here, after it couldn't get through there before, the smart traders know we're going higher, and they all start piling in. And next thing you know, we got a trend going in the other direction, a strong trend. You know this is strong because we're trading mostly in the upper half, and we can't even get back to the trend line. And then we end up overshooting too. That tells you this market's it's trending really strongly. So, and what this is we spiked up and went into a two-tiered channel. So it's a spiking channel right here. And this one's real tempting, but I really would wait until I got a little confirmation, which you do there. But that bar's a little too bearish. But when it comes back again, and you get a second entry long, because that's a new high, it's higher than these highs right here. So first entry, second entry, and then there's a failed second entry short there as well. You're moving up first entry, second entry. Actually, it was a failed second entry short when it broke higher right there. But I'd wait on a little better setup, which right here, and you can see that's where it took off too, because that's where the smart traders say, okay, I see enough here, we're going higher, and they all start taking it higher again. And I would measure this move, and I'd look for a measured move from here, and actually I'd look for one from here too. And you can see that got you right about to where we found a little resistance. We ended up going higher. This just turned out to be a strong trend, and what's happening is all the shorts that have been piling up the last few days are having to, you know, the smart ones are getting out. They're taking their profit and getting out, and so they're buying. And but anyway, that's another great trade. If you catch that one trade right there, you may not be able to get in that one because it gaps right kind of over that the EMA right there. Look how it gapped over it coming down, and then gapped over it coming back. And that's telling you, you know, that's a, you'll see that. You'll see it gap over trend lines, support and resistance lines, mid lines, EMA, the key entry points. Same thing, those key entry points I'm always talking about. Again, I don't know why, don't care why. All I know is it does it. I've seen it do it enough times that I know when I see it. A lot of times, especially on my trend lines and trend channels, I know I got them in the right place. because you see them gap over them a lot, and a lot of times that's a good confirmation that you've got your line in the right place. But this turns out to be a great trade. There's a higher low right here that you might have considered. Again, I didn't mark it. It's a possibility. You know, there's going to be several in here that I didn't mark that you might like. I don't think you want to go short in here. You see, we bounced off the midline, and there's another little turn back down, and then another one right there. And this is actually a failed second entry short. I marked that one, and I did in this one because you don't really have a new low. You know, the fear is here you're going to push back down to here, and you know you're going to get a close outside, and then you're going to try to go lower. So you better at least wait on a failed second entry short, and then you better have enough room to get out. So I marked that one. That's not a very good signal bar, but considering it's a failure and probably a trap if it goes higher, then you could, you know, you can live with that signal bar. And so I marked that one green. Same thing, we come back here again. It's really just a little repeat pattern. We went a little further down. This time we actually got below, but we pushed through here and pulled back. Gave you a failed second entry short. And it is a repeat pattern, so I say take it this time and look at it go. And again, I wouldn't be taking any shorts up here. You see what would have happened if you tried to get short up here. You just get burned, and it's not worth it. And you don't really want to go long up here. Actually, let me show you this. That's where I would have had that line probably originally right in there. Notice there's a little gap right there. That's kind of your original close right there. So there's something going on right across there. You know that because you see that little gap. I would have actually moved this up a little more, at least to here and maybe to those closes as they happen. But you don't want to really be doing much of anything up here. You might get short up here if you want to try to pick a top, because now you got to close outside and you got two legs up. They're basically two measured legs. So if you want to be real aggressive, you know, you might think about a short there. But again, I'm just telling you, as strong as this market's been rallying the last couple of days, I would sit tight and just wait for a long. You can see we finally got back to the trend line here. And you got a nice bullish bar. And this is a new high, so there's two legs back. This is a second entry long when it broke higher right here, and it actually went lower and then turned up. I like that one. It's at the key entry point, so you're probably going to get another big move, and you actually get a little spiking channel up here. And here's your reversal pattern. You still got a little room back to that original high. This is like a little, notice where that line is right there. There's some resistance right there. And actually, you probably would have been a little bit higher here. And it pulls back and tests it on a failed second entry short. And then it takes off. And it still chops higher. You really want to make sure you got enough room to get out before here. And if you do, then I'd be okay with that one. Otherwise, you might make that green. But it works on up. Again, I wouldn't be trying to get high with all this congestion right here. There's just another little congestion, and all congestion is a miniature trading range, a smaller trading range, whatever you want to call it. I call that congestion. They're the same thing. It's just a small trading range. And look at it. You're just stuck there. So you don't want to go long or short there. You want to look at your failures. So you get a failure out the top. But again, the trend is up, so I'd be very leery about going short. But if you were going to take a short, that's where you might take one, because it's, you know what happens on failures, they almost always come back into the range, even if they're going to go higher. So we'll mark that one green. But this late in the day, I mean, this is right before 2 o'clock, and the trend's been up all day. You got to be really careful. You know, it's just, you know, if there's plenty of room, but the thing I will say is you are a long way away from the EMA, and it's such a small bar, it's a real low risk. And look how it just fell straight down to the trend line. And we actually got a little close outside finally. Moved up, looks like we made a new high by a tick, and the market reversed. So that's what I saw today. And I know I went through those a little quick, but still a lot of trades there, even though, you know, the volatility's down a little bit. Still volatile. Don't take that to mean that this is a normal market, because it's not. We're still volatile. but it hadn't quite been in, the type volume we were having a few days ago. I mean, we were, well, I showed you yesterday, there would be 3 or 4 pages of nothing but white, where we can get the white all on one page today. So it tells you there's not as much volume, still some volatility, and we're still a lot of movement, but not nearly the volume we had really for a couple of days there. So, yep. That's probably going to do it today. I hate I rushed through it, but like I said, with my eyes today, it's a little difficult for me to sit here and look at this screen, and we still got 20 minutes worth, so I was going to try to keep it under 10 minutes. I always say that. I never do. But anyway, I'm going to wrap it up. Hope you had a good trading day. I wish I could have gotten a couple of these moves myself today, but that's the way it works. There's never any regrets. The market's always going to be here tomorrow, and it's always good to get a day or two away, even on trading days. Just take a break every now and then, because when you come back after being gone a day or two and having missed a few trading days, it kind of refreshes you and gives you jump starts you to a new start. And I always seem to have my best days after that, because I'm eager to come back, and it doesn't feel so much like, so this gets real. Trading is a boring, lonely life, because you can't really talk to other people about it. You don't need any negative influence on you. So I don't tell a lot of people I'm a trader. There's a lot of people know, but I never bring it up. I never talk about it. If they ask me questions about it, I'll try to answer them, but I usually try to change the subject real quick, because it never fails. They always turn it into, well, you're just gambling, you can't really make a living doing this. Nobody can really day trade, and you don't need that negativity in your brain. And I told a long-term trader that the other day. He sent me some emails that, he was questioning some things and starting to not believe. And I said, the only thing you're doing by not believing is limiting yourself to success, because that's why most people fail, is because they really deep down don't think you can do it, or that they can do it. They don't, a lot of this is mental. So don't let don't let other people, where I really originally started here was, don't let negative influence mess you up. You're better off probably not to tell people what you're doing. You might tell your family, but even your family will beat you down. My wife was so mad at me for the hours and hours, and that I spent in this early on with nothing to show for it, except probably lost money at first. And I wish I'd have known what I try to teach people now, is that don't ever go live until you prove you can do it on the simulator. I'd do pretty good for a week or two on the simulator, and I think I'm ready. And then you find out in just a blink, no, I'm really not ready. But if you set it up where you got a little pressure on you that, hey, I can't go live until I can double a 10,000 account trading singles or 2 or 3 contracts at the most, then you put some pressure on yourself, and it makes it a little more, it's more of a realistic feel, because you're pushing yourself, and you have to do well, and you have to follow the rules. And so keep that in mind. I always tell people, don't try to go live until you can double or triple a $5,000 or $10,000 sim account, just trading singles and doubles or triples or whatever, if you want to do runners. And when you can do that, and you did it following the rules, and you'll know, don't fool yourself. Don't be trying to double down and add on, because you'll get lucky sometimes, but you won't be able to outlast those trading live, and you'll blow your account, and you'll get taken out, or you'll get stopped out, and whatever. So do it the right way, and if you can do it the right way on a sim account, then you're getting close. So anyway, I'm gonna wrap it up. We'll be back again to do it tomorrow and wrap up our week, but I'm done today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.